Hey everybody, welcome back. It's good to be hanging out with you guys again. I've got an amazing guest who's also truly a really good friend of mine, Paul White. You're going to love getting to know today. Paul is a passive investor, and I'm interested to find out how he ended up where he's at today. He runs an amazing orthodontist business as well, which is reopening in Virginia on Monday. Woo! Can't believe it. And so I got him right before chaos starts in a couple days here. And so, Paul, welcome to the podcast today. How you doing?
I'm doing great, Jim. Thank you. I don't know about you, but I keep hearing other people tell me they don't like their term passive because it's such, it's kind of not exactly true, right?
Nothing is passive, is it?
I was telling some friends of mine the other day that, I have some guys, medical guys I'm coaching up and all that, and their version of passive investing is they just want to open the mailbox up and take the check out and give it to somebody to take to the bank, and that's pretty much their extent. And I think it's a little more involved than that, as you would probably agree.
I would agree, but let me tell you a little story about a guy, and I don't know if he's listening, hopefully not, but he's also in the medical field. But anyways, I kept mailing him a monthly joint venture check, and he didn't cash it for over 6 months. I thought, my goodness, that truly is, I had to reissue the checks because they expired. So that was passive. You know what I mean?
That might be passive.
But, you can structure things. I've got some folks that we work with that like monthly payments, and I have others that are in joint ventures that prefer getting paid quarterly, which is even more passive. So there's all these different levels, joint ventures are pretty passive, but turnkey rentals and private lending and stuff, there's some moving parts too.
Yeah, there definitely are. With the guys you're paying quarterly, I'm guessing they don't, but do you do anything to assure them that you're still alive and there's still money in the deal and things are progressing, or,
Well, I guess they haven't read on Facebook that I've died or anything. So they're pretty good guys. And, I'm sure they're going quarterly. I've got some that want monthly, others that just send it quarterly, especially if it's just, if it's a cheap joint venture. Say it's a $40,000 investment, that might equate to a $300 a month cash flow. So they're just send me $900 every 3 months. Yeah, it's easier.
Well, the other thing is if it's money coming out of a self-directed IRA, which a lot of private lenders are doing, it really doesn't matter to them. I'll usually negotiate that to maybe a little bit more of a deal in my favor if you hold on to the cash, because it's certainly worth something, to you to not have to make those payments. So, and win-win is what we're all about, right?
Yeah, it is. So usually you and I are hanging out at Starbucks having a coffee. True story, right?
I'm going to write my name on my little.
I like it. So I've had the pleasure of doing that, but we're both in Richmond, but we actually met in Dallas at David Phelps' Freedom Founders Mastermind, correct?
Yep. That's been a while back now.
Amazing. So let's go back in time. Where did you grow up and how did you end up going to orthodontic school and things?
Well, that's a great question. I grew up in Richmond, so I didn't get very far. I didn't come from New York, like you did. So, I just didn't get very far. I had these visions of couldn't wait to get out of Richmond when I was in high school. And when I got out of Richmond, I missed it. So I came back, did a stint in the Army for a time. I was stationed at Fort Benning and Fort Sam, a little bit in San Antonio. And other than that, I really haven't been away from Richmond for very long. And I put down roots here to stay probably 30 years ago or so.
Oh, wow. So you grew up in Richmond. Whereabouts in the Richmond area?
In the north side.
Uh-huh.
Mm-hmm.
Over near Bellevue?
That's where my mom grew up in Ginter Park. I actually grew up in Chamberlain Farms. So
nice.
Even farther out. So
very nice.
Yeah.
All right. So then after high school, what did you do during high school? Did you work at all? Did you?
Oh, yeah. Yeah.
I know you're a hard worker.
One of my skill sets that I don't tell anybody about because I don't want anybody to use it anymore is I painted. So I painted through high school and college and dental school. And, there's nothing more humbling than having a guy riding around in a truck drinking beer all day telling you guys how stupid you are. So it's a real self-esteem builder, but I did that too. And I hung sheetrock and at the I guess the Grace, the hospital on Grace Street. I don't even know what it was St. Elizabeth, I think, at the time, and they've changed the name a couple times. So and I hitchhiked to that job. So, you know, they don't do those kind of things anymore, and that was 14-foot sheetrock. That stuff is heavy. So,
Oh, it is. It
yeah.
is. You know, I don't, as you know, I don't do any of my own work. The only time I've ever done sheetrock work was after Katrina, when I did a missions trip to New Orleans, and I learned how hard it is for all of our guys to do it for me all the time. I didn't.
No doubt, especially if you're going over your head on the ceiling. That's the worst.
Yeah, it's really bad. All right. So then where did you go to college?
I went to UVA.
Of course, a great school.
Yeah. And my oldest son went to Tech, you know, and we didn't talk much about football when he was there, because we didn't win a whole lot of games in that period. So, and he was pretty gracious to me. So, as a matter of fact, I probably went to more Tech football games than I did UVA games at that time. So I'm not a fan, but I will root for him if they're not playing UVA.
What's that? 4 years at UVA?
No, you know,
how did it work?
I left after 3 years and went to dental school. I was fortunate enough to get in, and I was paying for it, and I didn't want to, you know, I knew what I had to do, and knew what I wanted to do, and didn't want to spend any more money, you know, not doing what I wanted to do. So
did you do 4 years in 3 years time?
I guess I did 3 years, and enough to, I had acquired all the credits that I needed to apply to dental school, and I took the dental school, you know, the dental aptitude test, as they say, and took all that and then got in. So I was good with that. So
shortcutted a year. And then so where did you do dental school?
Yeah.
Where did you go for dental school?
Oh, I'm sorry. I went to I guess it's VCU now. It was MCV at the time. So I still call it MCV. I know that's not politically correct, but it's always been that to me. So,
me too.
And my dad went there when it was RPI. So that's a long time ago.
So then you go into dental school, and right here in the heart of Richmond.
Yeah.
And so were you living downtown at that point, or were you still living up north side?
No, I was living downtown, and then ended up out in Creighton Court, out past Creighton, in a farm. So we would drive through Creighton and across the Arthur Ashe Bridge every morning, and come on into school. So.
Oh, that's amazing.
Yeah.
How long did dental school take you?
4 years. It's 4 years. Yeah.
Okay. So that's 7 years. That's a long time.
It's a pretty big commitment. I told somebody, I said, you know, and since I didn't get didn't get a college degree, I was through dental school. I'm thinking, I'm hoping this dental school thing works out, because I don't have anything to fall back on other than painting and sheetrock. So.
So that's 7 years. That's a long time.
Yeah. Well, it gets longer.
It is. So yeah. So let's talk about that. So most people stop after dental school, but not you. You're the classic overachiever, Paul. So what did you do then?
Well, I actually went in the Army and defended the country against tooth decay for some years, and then after I'd been all I could be, then I came back home, and I had made provisions to buy a practice and get started, and things. You know, you look back on your life sometimes, and things happen and you don't understand them at the time, but then you see God's hand moving you in certain places. And so I had a plan to buy a practice, and had a house, and all those things fell through. And, and they were blessings later. They were a little stressful at the time, but so in that time I started working for another dentist, and then I started just thinking about what I wanted to do. And that's when I decided to go back to school one more time.
So how long did you work with the other dentist before you started going back full time?
I worked a year, and then I had just missed the deadline. And so I told them, you know, that I'm going to apply to Orthodontic School, and if I get in, I'm going to go there. So I ended up getting in, and I did what I said I was going to do. So I left.
So where did you do Orthodontic School?
In Atlanta at Emory.
Oh, wow.
Yeah.
And how does orthodontic school work? It isn't often. I've never been able to ask this question. So we always talk about real estate at Starbucks. Now I can really find out.
Well, you know, there's a didactic book stuff, you know, and then every day there's a clinical portion of it too. And so ours was a little bit different, where it's more clinical than it was. You know, you got all the book stuff that you needed, but it was pretty heavy clinical, which is, you know, I wasn't going into research, and I didn't care about a bunch of degrees. I just wanted to treat patients. So.
Yeah. So how long did orthodontic school take?
That was 2 years, another 2 years. Yeah.
So you're up to 9 years now.
Yeah. Yeah.
You must be about through your 20s.
Yeah. I might've been past that. Let's see. After all that, I guess I was close to 30 at the time. Yeah. So there's some lost opportunity cost there, right? When you think about, because I talked to a lot of kids that come in the office today, and, college is not for everybody.
Oh, it
And
is.
the trades are a great way to go. And, you think about if they start working in the trades at 19 or 18, and then they continue to work until they're 30 while I'm in school paying money to go places, they made a pretty good chunk of change where I wasn't making any. So there's a pretty big lost opportunity cost there that's gained. And, I have friends of mine that own HVAC companies and plumbing companies. They're doing pretty well. So,
They are.
not a bad way to go.
They are. And that's why I like the book that David Phelps wrote called The Apprentice Model also, because, there are options out there. It doesn't have, and nowadays it's even worse, Paul, because of the amount of debt. How much debt do you think an orthodontist would have at the end of the 9 years nowadays?
At the end of 9 years, I'm sure it'd be $600,000-$700,000. It's an unbelievable amount of money.
There's some opportunity cost there too.
They're a huge opportunity. I mean, they're not making and they're spending. And costs have just gone up.
Yeah.
I remember when I went to UVA, I think my bill for everything, room and board and everything, is about $3,000 a year. That's been a few years, so it was in the 70s. So, but yeah, it's pretty crazy when you think about it.
So then you got through in Atlanta. You're now licensed orthodontist.
Yeah, well, technically a dentist can do orthodontics if they want to.
I didn't know.
So by the license, so you'll see a lot of dentists do things like Invisalign and things like that. But their training, isn't quite what ours is, but the tool is there for them to use. And things like Invisalign or whatever tools you use are just tools in your hand. So you have to have the training and, of course, the skill set to be able to use them effectively. So but technically you could have done that day one. And there are some dentists out there that do braces and do, aligners and retainers and all those things. So
I did not know that either.
Yeah.
So then what did you do after you graduated?
I came back to Richmond and started a practice from scratch just because I like to do things the hard way. And I didn't want any income. I just wanted to have debt. So I kept going.
And is it in the same location it is today?
No, it's moved. I've moved 3 times. So
oh my goodness.
Once in the same building. The first time I was in, I did all the rehab myself. Speaking of rehab, a guy helped me, but I'm setting chairs in the floors and, cracking the concrete and, painting stuff and doing all that. So, again, when you're in debt, you'll do anything, right?
Yeah, yes.
My first employee was me. I would answer the phone and then they would come in and I would, it's pretty funny.
I just wanted to share that piece of your story because a lot of times people will look at people like yourself that are like very, very extremely successful and they'll just think like it just happened. And they just think it just magically happened. Like they won the lottery, they inherited a trust fund. You know what I mean?
Yeah, I was just talking to my son about this the other night about, that you hear these bands that are overnight successes, 10, 15 years later, after being on the road and touring and doing, just they finally somebody hears about them. I
heard a Dave Ramsey quote recently and he said something like, yes, I was an overnight success in 25 years.
Right. A slow reading group, I guess, huh?
Yeah, but wealth building and living your life takes time. And if you're not willing to spend the time doing it, you probably won't allow yourself to achieve financial freedom.
That's a great point. And I would say that it takes an amount of patience that you probably wonder if you have.
Yeah.
And I think anybody looking for quick overnight success or to get rich quick are at a risk to lose pretty much everything they're doing. So, everything can't be a home run. It's singles and doubles that'll get you around the bases and eventually get you where you want to be. But you got to you got to have a set of goals. And then you got to keep focused on those and keep reminding yourself of, of course, that book we've all read, Start With Why. You've got to have that, why am I doing what I'm doing? And then, stay focused on that and just stay, one foot in front of the other. And, like you've heard people say, you don't eat an elephant in one bite. It's one bite at a time until you get to the other side.
So then you were successful. You built a really great business. You've helped thousands of people. I mean, think about all the people with great smiles now because you fix their teeth, right?
Yeah, well, we also treat patients that have pain, so we do that too.
All right. So, I recently had TMJ, so I can appreciate that. A whole lot more now, Paul.
Yeah.
I couldn't even eat pizza for a while, like a month.
Yeah, it's not a problem until it hurts and you can't do something, right?
You know, my wife Cheryl, you know, she had it right before we went to Alaska a couple
Yeah,
of years ago. I didn't realize like that's terrible.
it can
In
be
my
devastating.
case was bad.
Yeah, well, they say one of the cause of that is stress. So I don't know if you and Cheryl need to go talk to somebody or what.
I think, well, I mean, the timeline was like right with my deal maker boot camp. So I could
Yeah,
see that. I would never think I was under stress, but
yeah,
it's possible for
yeah.
sure because there's a
It's very probable that's what happened.
million moving parts running that thing.
Right.
And so,
You did a
yeah,
great day, and it was awesome as usual. Every year that I've been, I'm like, man, that's incredible. How's he going to outdo that one? Then the next year I go, man, that was incredible. How's he going to outdo that one? And every year you keep raising the bar, and it was fantastic. So,
well, I got a little jaw issue this year from it, but it's okay. It's finally getting better 2
right.
months later. So how did you end up to the point where you wanted to learn about real estate?
That's a great question. Warren Buffett famously said that, if you don't make money while you sleep, you'll work till you die.
Hmm.
And that sort of got my mind thinking about, the difference between, passive income and just income. And I started to understand that, Kiyosaki's books were great. You start thinking, well, this real estate thing may make sense. And I was actually at another mastermind and David came and spoke there and I went, that makes sense. I was at an orthodontic mastermind. So, I'm always, ever the student, right?
Yes.
And what he said made sense. And so we had a conversation about that. And then I signed up for his mastermind. But, the sort of the big aha moment for me was for so many years, I would give these guys my money to invest and my account would go nowhere and their account would go up. Right. And that got a little frustrating. And a friend of mine's dad, who was one of those sort of millionaires next door, just a guy under the radar who did pretty well. He kept saying to me, I'm telling you, blue chip stocks that pay dividends. And so finally I did that and we're doing pretty well, especially these last 10 years. If you can't make money in that market, you shouldn't be in the market. Right. And now it's getting hard. And he said, so I'm making some money and I started thinking about this passive income and burn rate, right? How much money you go through in a month, and whether you can reduce some of those expenses or, what's the bottom line for you? How much money do you need to live every month? And then you got to allow for taxes on top of that. And so I called my broker and he's a broker in name only because I was just doing it myself on Merrill Lynch. And I said, so curious, how much passive income am I, is this money throwing off? And he said, I'll get back to you. And when he called me back and he said, it's this number, I went, oh, okay, I'm good for a month. And the rest of the year, I got to go get a job again. Right. So it was an aha moment say, I better do something. And so passive income became the way that I started putting, I followed the Dave Ramsey model that you mentioned. I had saved my money and I was out of debt and I did all those things you're supposed to do, but it's just a pile of money sitting in the bank doing nothing. And, it made my wife feel good. But once I understood passive income and debt equity, I was like, this makes me nervous. Right.
Yeah.
And so after she got over the feeling that I'd lost my mind and I was going to lose the house and everything, she started to trust a little bit. And so that's when I started, understanding, alternative investments and real estate being one of the better ones for me. I'm not a Bitcoin guy. I'm too old for that.
Yeah, me neither.
I can't take that ride, I don't think.
I want to do stuff I understand. And as you
Right.
guys know, all my listeners know, real estate's the thing for me. So you've done private lending, you've done turnkey rentals, you've done, oops, sorry about that. All these different things, right?
Yeah, I've done, like I said, I've done, real property and different kinds, multifamily, single family, those kind of things. And I've done private lending. Private lending has been great. I've actually been buying mortgage notes lately. This past year or so has been a good time to do that.
Yep.
And I've been involved in funds and syndications on the A side and also on the B side, actually raising money and being part of the sponsorship. And that's been great too, because it's a way for me to help people that, I think syndications are great for people that don't understand real estate that well. And even, for somebody like you that's trusted to do some private lending is a great way to expose them to real estate without, the risk involved that they don't understand.
So you've done notes, you've done lending, you've bought turnkey rentals. I was thinking back, I think we've done a couple things together.
Yep.
Hopefully we'll do a lot more in the future.
Yeah.
I believe we will because we're friends. But looking back over those, which ones have you liked the most? Like notes go a little bit longer, private lending is a little bit shorter, syndications can be a little longer. Turnkey rentals have some ups and downs as well.
Yeah.
What
Well,
do you like? Which
what
ones?
I like doing, I did some active turnkeys when I first got started, and those opportunities aren't there yet. They may be coming back pretty soon. But that was sort of fun. But at the same time, I was so, you know, I was telling somebody the other day, guys would call and I'm working, I'm seeing patients, and they'd say, "Hey, we need more money." And, I just get on the phone and wire it. Right. I
Yes.
mean, as medical people, we do whatever it takes to take care of patients. If it costs us money, whatever, we want them to be happy, want them to be satisfied, and their care is what is all we're focused on, right? And that's really it. And so we just assume that everybody else we work with, real estate or otherwise, is going to be as trustworthy as we are, because they're going to treat us like we do them. And so I was just wiring money, and I never checked. I didn't ask for what is it for or anything. And it turned out at the end of this one rehab, when it was all said and done, my son and I have created some software, maybe we can talk about it later, but once I went back and put entered all that data in there, the house was rehabbed, there was a tenant in place, and my rehab budget was $8,000 over budget. And I went, what the heck, $8,000? And I called the guy, he's a good guy. And I said, what, 8,000, what's going on here? He said, well, we put new windows in the house. And I go, well, I'm not saying I wouldn't have done that, but I sure would have liked to have been involved in the decision. So I'm not the guy now that starts just stroking checks and wiring funds. I want to know what's going on, and I have a way to track it now that I didn't before. So it's a lot about what I didn't know,
Due diligence and knowing the process is really critical. I agree.
It is, and I still think so many people skip due diligence. They look at a number they're going to get as far as a yield or whatever, and they sign up, and that's that can be dangerous. So
I really liked a Dealmaker this year. I really liked some of that Mary Hart hit on.
Yeah.
Because she talked about due diligence of people. Nobody ever talks about that. They always talk about deal analysis. And even on the deal side, I remember her saying, run your numbers, then run them again, and then run them again.
Well, and not sure. Yeah, not only that, I did a little video the other day showing how to stress test it. So you got to run through the what if scenarios, right? What if you've got to have a rent abatement for 3 or 4 months, or what if you have to cut the rent by half, or what if you've got financing or not? You got to sort of run through those scenarios, not just go, here's how much money I'm going to make, and trust that, whatever you're being told is going to happen actually happens. You got to go back and sort of do a after action report and say, well, they said the ARV is going to be this, and it's this, or they said, these things, and you have to sort of make notes of that and know that's a trust. So they may have meant with all their heart that it was going to be this, but it wasn't. And if it's consistently wrong, it may not be a dishonesty, but it may just be they're not prepared to give that correct number. But that's
maybe not experienced enough.
Yeah. And it's our money. We worked really hard for it, and you can lose it all really fast if you're not careful. So
yeah, that's a good point. Yeah. All good, really good points. So looking back over all your different types of investments, which ones are the most passive or create the returns you're looking for with the least amount of work?
Well, I think if you have the right borrower, that the short-term lending can be a great way to go, especially in your self-directed IRA. I think that combination is pretty powerful.
You and I have done some of that together.
We have, yes, we have, and it's been great. So as long as there's a way to check in and know that things are progressing as they should, and we're not hitting the skipping town and going to Tahiti with the money, it's a great way for us to participate in that, and it doesn't take a lot of effort with that. So, but there's a certain laziness in that too, that you do need to make sure that you vetted not only the deal, but certainly the borrower as well. So that's what's great about you. You're very trustworthy. So I would vouch for you with anybody.
Yeah, I appreciate that. Yeah, we never had an issue and never will. Okay, very good. So you like private lending. Do you like the short term, or do you like a little bit longer? Because it can be a bit of, you get like gaps. Like if you get, for me, when I'm private lending, if I send it out and then like 4 months later it comes back, that's a really nice return because it's short.
Right.
But then if it sits there for 2.5 months, then I'm not earning anything for 2.5 months either.
Yeah, a 12% return in 4 months, and nothing else happens the rest of the year, you have a 3% return. So,
right.
And so yield drag is a big deal. So, the challenge with short-term lending is there's a lot of churn, and you have to be constantly working that. And I think there's two key factors in that: knowing when your next deal is coming. So you got to know when that other deal is going to be done. And sometimes there's a little inconsistency in that, because they may usually they'll typically write the contract for a year, but plan only to keep it for 6 months. And if you don't have tabs on that, then you may get something dumped back in your lap, and then you're trying to churn another deal, and it's going to be another a month or 2 or 3 that you're lagging trying to find a deal. And then now that great return has gone down. So some of the longer term lending may be a little bit less return initially, but there's less to do because it's a more consistent cash flow for year after year. And so, there's that balance. And I know a lot of borrowers that just say, look, let me have this cash for, a year or 2, and I'll keep it churning, and I'll give you this return. And that, it's again, a win-win for people. So.
Okay. Love it. So when you've got all these different investments going, you do a lot more passive investing than I do. I'm more active, but
Yeah.
I do some. One of the challenges is like keeping track of everything, especially if it's inside of a self-directed IRA. You can easily lose track of a loan, and all of a sudden you're past the due date, and like the loan is supposed to have expired 3 months ago, or somebody didn't pay you for 60 days because you got multiple investments going. And so did you run into that as well?
Oh, I did in spades. I finally understood when the person that holds your money in the self-directed IRA is called a custodian. Yeah. I finally understood what custodian meant when I finally had some abilities to track these things, and I went back and looked historically. I'd missed one $1,500 payment, and wow. one of the lending deals inside of that had gone on almost another year.
Wow.
And I had no idea, because I was being passive, too passive at the time, and I didn't have the tools to track that. But yeah, things can happen if you're not watching. And the problem with a lot of us is we're already working another job, and we don't want another full-time job. And so it's trying to find that balance where you're making income, but not having to do stuff all the time, because we don't want a full-time job. We already have one. So.
And it would have been nice if your investors had called you and said, yeah, hey, I'm going to be a little late, or forgot to mail your payment, right?
Yes. Yeah.
They don't. Not always.
No. And then if you're not careful, when you start to settle up the loans, they treat it like they paid you that $1,500, and you end up $1,500 short on the deal.
Payoff.
And that happens.
So you started to see that problem, and then you and your son started to work on a solution to that problem. Can you tell us like how that process went and how you ended up with numbers?
Yeah. Well, what's funny? They say necessity is the mother of invention.
Boy, it is.
And, I was gung ho. I was, like I said, I had some money. So I'm doing these active turnkeys. I'm lending money, and things are doing great. And I'm feeling good, because for the first time in my life, I could see what I had bought. I could see it. I could touch it. I could drive by it. There wasn't some guy in Wall Street manipulating the numbers or doing anything. I could see it, and I'm feeling pretty comfortable, right? Because I'm finally getting a return. No one's telling me what to do and charging me a bunch of, fees and things. And I felt great, for the first time in my life. It really was freeing. And then the phone started ringing, and then the email started coming in for more money, and these deals are closing, all that. And it started turning chaotic. And, in my zeal to jump in with both feet, which I tend to do, my organizational structure at the time was a bunch of piles of paper on a pool table.
I remember.
And my wife had come back and in her wisdom had taken at least those piles and put them in folders and put the name of the asset on there. And so we had some folders with all these assets, and then I started asking other guys in this mastermind, what are you doing to organize? And I would say shockingly, most people weren't doing anything. They were doing the same thing I was. Maybe it wasn't a pool table, maybe it was a spare bedroom, or just a pile on the floor by their desk. But I was shocked. And then a few of them were using spreadsheets, and I would say, so tell me, what kind of spreadsheet design are you using? One guy would say, well, it's some design that my brother-in-law's best friend gave him, or I found this one on the internet, and there was no consistency there. As dentists and orthodontists, we like things, just so. And it was chaotic, and so that's when I started to say, well, to my son, who was in IT, he graduated from Virginia Tech in information technology. And I said, can you make me a spreadsheet? And he goes, sure. And and I got to tell you, as a dentist, I've not had much need for a spreadsheet. Right. And so those things intimidate me. Right. And so he started developing the spreadsheet for me, and he goes, what do you want to do? And I said, well, I wanted to do this. And I kept saying all these things I wanted to do. And he goes, all right, wait a second, make a list of what you wanted to do. And I put this, and I made this long list. And he goes, a spreadsheet can't do these things. I said, what do you mean? He said, you can't. I can do this, or I can do this, but I can't do this, this, and this with one spreadsheet. He said, you're going to start stacking spreadsheets on top of each other, and you're not going to be able to figure that out. You're not a programmer. And I was like, so what's the solution? He goes, you need an app. And I went, okay, what's an app? You know? And that's when we developed our software called RealNumberz with a Z. And it's a way for us to organize and track and follow and not have to worry about things. And so it's the solution to my problems, which were worry, stress, not enough time, and disorganization, and no knowledge about what there's a commercial out there now. I don't know if you heard it with Netflix, not Netflix. That's what we're watching all the time. NetSuite's called, if you don't know your numbers, you don't know your business.
Ooh.
You've heard, I don't know if you've heard that or not.
No, but I like it.
It's on all the time. And every time I hear it, my ears perk up, because there was a while, and I would tell you, most passive investors are guilty of this. We treat our investing like a hobby.
Yeah.
Right? Now, I guarantee you know exactly to the penny what you're spending on a rehab, don't you? And you know what you've got to come in at to make this deal profitable for you, don't you?
Absolutely.
We don't. We're so used to a broker telling us what to do, and here's how much money. We just look at what's left at the end of the day, and it's a horrible way to do real estate. So it answered all those solutions, and so we built a pretty powerful piece of software. And it's like you said, software's never done, so it just has this long life that I call it wireframing, right? Because that's what the tech guys call it. My son says writing a bunch of crap down on a piece of paper and expecting me to figure it out, right? It's the arrangement we have. But I got to say, it's been pretty amazing to watch these things that are in my head and these things I'd like it to do. I tell him what it is, or I write it down, and he opens that computer up. And you know how our parents used to say new math, right? Well, there's a bunch of stuff going on in commas and quotes and ones and zeros. I have I couldn't begin. If somebody put a gun to my head and say, fix this, I'd say, shoot me now, because there's no hope that I could understand what he's doing. So, it's a way to really appreciate your son and what he's learned all these years and what we spend our money on, right?
So I've seen the software. He did an amazing job. That is really hard to program and do what he did with all the coding and everything. I mean, I was blown away.
I've had some people in other forms of software that have been in the business for 30 years ago. I can't believe he did it by himself. It's pretty amazing. And it's still growing. I'm adding stuff to it every day, and we're talking every day. But there, what's interesting is you take something like a spreadsheet. That was technology from the 90s, right? And it was not made for real estate. It's just some technology that people adapt. And I know a lot of developers and these trusted advisors, we call them, use Podio or some of these other things, but you have to have somebody program that to do what you want it to do. So it's not scalable, and you need a programmer to fix this stuff. And it's only just what you do. And it's every time you want something to change, it's costing you money to keep doing those things. And even with spreadsheets, if you have a spreadsheet on top of a spreadsheet just to have some functionality, if there's something on the bottom that you want to change, you got to go all the way down to the bottom, change that number, and come all the way back up and do it. So it takes so much effort to change anything that we just this is good enough, what I've got. And so there's a certain laziness to using software that needs to be upgraded and changed all the time, because you don't want to spend the time or the money to go through doing that. So you just go, well, it's good enough, So
if one of our listeners want to connect into that, I'll put a link down below this if you're watching on YouTube or my website. But if you're on iTunes and you're listening, where would you go to get that info, Paul?
Yeah, if you'll go to our website, it's www.realnumberz, RealNumberz.com. And there's actually an option where you can, try a free trial.
Nice.
But the feedback, what's interesting to me is when we started this process, we interviewed a bunch of investors and said, what are your challenges in managing your real estate portfolio? And 8 sort of things came up, and 4 of the top 8 had to do with organization and access, right? One of the bottom ones had to do with analytics. In other words, no one cared about their numbers. No one thinks about this kind of stuff. We just go, I had a friend of mine in that same group who was sort of my mentor as I was coming in. And, he's a little bit older than me, and he probably had close to $3 million invested over time. And I said, so I'm like, I have no idea what to invest in. Keeping track of it wasn't even the issue then. I was new to all this stuff. And yet you're a little nervous about putting your money somewhere, right? And so I said, what are you investing in? And he was telling me all these things. I said, so what kind of return are you getting? He goes, I don't know. I said, seriously? He goes, well, I guess I'm getting about a 15% return. I go, well, where'd you come up with that number? He said, well, that's what they told me I'd make. I said, seriously? I said, cool. What are you doing? I said, are you sure you're making that money? He goes, I don't know. I said, well, don't you think you ought to know? And I was challenging him, not because I was concerned about him, but if I was going to put my money where his was, I wanted to know what he was getting for it, right? And so I just kept pushing him. And finally, he and his son took out a spreadsheet, and over a period of about 60 hours, over a period of several weeks, I mean, a bunch of weeks, because he was working, they crunched all the numbers in his assets, and he'd only had them for a year or two, right? And his 15% return turned into 3.7%.
Oh my gosh, Paul. He needs me.
You're saying, oh my gosh, guess what he was saying? And I was saying, oh my God, I'm not putting my money there either. And so, instead of making $450,000 a year in passive income, he's making like a little over 130, 120.
Wow.
So that's a $330,000 difference between what he thought he was getting and what he actually got. Now tell me if that's not a reason to be concerned. Yeah. And he's like us. We trusted those guys, said, we're going to make this kind of return. We give them our money and we expect it to show up, and we don't check on, right? And so our stuff has every asset that you have, whether it be, real estate or lending deals or mortgage notes or funds and syndications, has a ledger to it. All the income and expenses coming in, you have a number, a return for that particular asset. And then we're building in returns for asset classes, and then building in a return for your entire portfolio. So when you enter the app, you want to know what your portfolio is returning. And so it gives you a weighted average of all the returns that you're getting. So if you've got somebody who wants to be a passive investor and say, I need to double my income in 7 years to get out of this, so I got to make a 10% return. Well, how do you know if you're making that if you're not following and tracking those numbers? And I think it was either Drucker or the guy GE was saying, anything that's not measured doesn't happen, right? Yeah. So you have to have that. So to be able to have the tools that you have at your disposal as an investor, I think but without the work, right? I don't have to pay anybody to do this. You can. You can use a sub account where they can't see any of your stuff, but they can enter, transactions for you. So all you have is the numbers if you want them. But you have an at a glance view of where you are in your goal to whatever it is. So it's been great.
All right. Well, thank you for sharing that, Paul. It's really good to catch up with you. I know you're trying to get on schedule to get your orthodontist opened up in a couple of days. So I'm going to respect that. And when this crazy time we're in is over, we're going to meet up at Starbucks again and catch up, right?
That sounds great.
I'll really appreciate it.
I'll buy this time.
Yeah, okay. You can buy this time. That's all right. No, I'm buying, and that's just the way it's going to be. No, I really appreciate you as a friend and as a respected colleague. Congrats on everything. And all of our listeners should go to RealNumberz.com with a Z on the end and really check that out. If you're looking to make the switch from active to passive, you've got to have a way of tracking your investments. And this is a great way to do it. We talked about some of the downsides. If you don't track it and you don't really know, your return won't be 15%. It might be 3 or 4. And you could be losing money every week. It really is, yes. So, Paul, thanks for sharing today, and thanks for being my guest on our podcast.
Well, Jim, thanks for all you do for us, too. I appreciate it. Thank you.
All right, everybody. Thanks for all your comments, your shares, your likes, and reactions. You guys are all awesome. I hope you guys are thinking about how you can switch from being more active to being more passive along the way. And today's podcast was of great benefit to you. See you guys later.